Hi, this is Glenn Royal, Chief Investment Officer and Partner at RHP Wealth Management. Welcome to this month's Market Minute. We've seen quite a rebound in the markets following the April 2nd Liberation Day lows, and that's largely been related to earnings. We just finishing our second quarter earnings period, and companies were expected to return profits of only about 4% growth. But they've managed the tariff situation well. They continue to show how strong this economy is underneath the surface. And as a result, profits came in at 10%, much better than the 4% earlier expected. That profit growth, that stronger than expected profits, is one of the reasons this market has recovered as quickly as it has off the April lows. Couple that with expectations this fall and into next year of a much friendlier Fed in terms of interest rate cuts. Interest rate cuts will feed back into equities and should lift equity prices as well as bond prices. Pretty good setup going into it, but I do want to point out that second half this year, we'll start to see any impacts on related to tariffs if they start to bleed through to the corporate balance sheet, particularly through cost of goods sold. Where will those costs be pushed, if any? Will foreign companies absorb it? Will U.S. companies absorb it, or will the consumer? Time will tell, and we probably will find out in the second half. What we've done, because of the little bit of uncertainty in a market that's really run strong, is perhaps a little bit overvalued and due for a correction in here. We position ourselves with high quality stocks that invest in the technology AI stack, as well as dividend paying companies. We've rounded out the fixed income portion to focus on high quality assets that have shorter maturities that aren't subject to deficits that may impact the longer maturities. So feel pretty good about the diversification. We like the setup that we're seeing in the markets. However, we do want you to be aware that we are on the rich side of valuations. And given all the changes and fast and furious as information comes out these days, you may see a little bit of a correction in price. If it were 10 to 15%, it would be kind of a normal type of correction following this bounce. I would be a buyer of that. As always, we appreciate the opportunity to serve you, our clients here at RHP, and we welcome you to reach out to any members here of staff if you have any questions or comments about today's video or about holdings in your portfolio. Thank you for the opportunity to serve you, and we look forward to doing so in many years future. Thank you.